All investors become traders anytime they buy or sell, and with the markets being so incredibly turbulent at the current time, there's never been a better time to learn how to trade. It's time to combine your capability as an investor to hold on with diamond hands with your capability to take advantage of spikes in price as a trader. Both things combined can make you more of a financial and emotional blessing to yourself and those you love. In this video, we're going to go through what's coming up this week, how price could go, and there's a lot that's going on. Let's run the numbers. This week is a really volatile week. Coming in on the September the 19th, the Fed is going to hold its press conference and the Fed interest rate decision. They're expecting consensus to lower the federal funds rate by 25 basis points. If they lower by more than that, that's going to cause a bit of grief inside the market. Also, on Friday, if the Bank of Japan interest rate decision, if they do not hold the consensus rate, if they unexpectedly increase their interest rates, that's going to unwind the Japanese carry trade. The probability of a 50 basis point increase was a lot smaller yesterday. It was 50%, 50-50 chance for a 25 basis point or a 50 basis point. Now it's nearly 60% probability that the Fed will cut by 50 basis points. This could literally rattle the markets. Add to the volatility that the quadruple witching is going to be upon us on September the 20th. This is the time when hedge funds, index fund managers readjust their portfolios. Expect a bit of volatility. Add to that the median returns of the S&P 500 since 1950 are the lowest in September. So we do have negative downside directional bias. Also, it's vitally important to learn how to trade. Investors typically just buy at one stage, hold on for dear life, and then try to sell at the top. Unfortunately, markets are not very forgiving. They're all up and down and all over the place. They're notoriously very hard to predict. That's why if you combine your investing and your trading at the same time, that's the way you want to do things. I've been mentioning on the channel that it's going to be increasingly important to know how to trade, because you can take advantage of the up and down movements that are natural in uptrends and also downtrends. In downtrends, things are always going up and down. With the Fed coming in and easing rates for the first time in a very long time, we do expect market volatility. And we're already starting to see that volatility inside Bitcoin. That big push up has nearly been erased. So this is a reason that it's really good to be able to trade and also to invest. You can take advantage of these pullbacks and you can profit when things go up. This is not the time to be upset or concerned about the markets. This is the time to learn how to take advantage of them. It's also really important to know that all investors become traders each and every time they buy or sell. Traders specialize in buying and selling efficiently and effectively. Investors specialize in holding on for dear life. Perhaps the easiest way to describe it, many people, when they become investors, it's like learning how to drive a car, but you can never, ever reverse. You must only go forwards. Traders know how to go forwards and also how to reverse, which is often helpful if you want to find a parking spot. The long-term direction on Bitcoin is unequivocally bullish. That means it's going to skyrocket over time. Bitcoin currently remains in a very serious uptrend. There's quite a bit of economic turbulence at the current time, so if we came down to between the 44 to 51 mark, that is still maintaining that positive trend line. Don't forget that you can get a wick under a specific level and it will still hold the trend. One of the good things about trading, you can manage to turn profits out of these up and down movements. The key is to always understand where the structural support and structural resistance levels are. So let's zoom in and have a look. A lot of people will be searching for reasons why Bitcoin sold off so significantly. But those people inside the service already know, and those people who have marked up Bitcoin with level 1 and level 2 standard certification also know. I'll just pop on the indicator to give you a feel. We can see here that there was a negative fresh air gap between 60,000 and down to around that 58,900 level. What happened was that we underside retested, just couldn't get above, convert that to structural support. So that just attracted the price down to this cluster of structural support levels. And so far, those structural support levels have been holding up rather well. It's vitally important that you make sure that you're marking up all of market structure, not just recent market structure. And that's the way the majority of people mark up their charts. With the CTKS method, you're actually marking all of price history up. For example, if you're investing or trading in Bitcoin and you see that Bitcoin is losing that $63,000 or $60,000 structural support level, it's getting weaker and weaker, and it just can't get above it and confirm it as support. It means that it's going to get structurally attracted to lower structural support levels, and these levels are very, very specific. They're the strongest statistical lines in existence. So when you see something like this, it makes a tremendous amount of sense. Now we can see that we're just north of 58,900. Does this mean we could come back to the 60,000? Yes, it does. Because if we confirm this as support, this positive fresh air gap or positive fair value gap actually will structurally attract back to the 60,000 mark. Unfortunately, the stack probabilities are unfortunately on the other side of the trade. It's likely that we will come down, but you must just center yourself for the fact that we could go up. Actually observing price action and seeing where it's confirming support is vitally important. If we come back to the 60,000, that's fantastic. If we hover around here, that's also fantastic because we can trade in any direction. But so long as you're just looking at a structural pass or a structural failure, that is a structural failure. We have a lot of structural support all the way down to 57,900, and that's a reasonable level of structural support. That means that we may get some consolidation action. You can see that a negative fair value gap or negative air can push the price down really, really quickly. But when you know where the structural support is, that's where it's going to get caught and rebound. Practicing your trading muscle as an investor is vitally important. We can see that this is a fairly reasonable uptrend. If we start to violate these structural levels and confirm as failures, we're going to see it on the chart itself. And if we get above and confirm a structural support, we're going to see that too. And just please be aware, the price could move up very, very quickly. As a trader and investor, you need to have three-dimensional thinking at all time. You have to think to yourself, what if the price goes up? What would I do then? And if it consolidates, what would I do? And if it goes down, what would I do? And you need to hold those three cases simultaneously. This is what all professionals do. Personally, I'm anticipating that we'll get more negative price momentum, but I'm fully prepared to take advantage of any up movements. If you're new to trading and investing, you might feel that the downside of action, you just want to sell everything and get out. Unfortunately, if you do this, you'll find that you get attracted back when the prices go up, and generally that's exactly the top when the price starts to come down. Whatever you do, don't run from the markets. Just have your three-dimensional thinking at all times. Know what you will do if the price comes down, goes neutral, or goes up, and have three strategies simultaneously. I'd like to give you a really practical illustration. When C19 hit, Bitcoin was about 10,000. By the time it was over, it was about 4,000. This was the ideal time to come and buy. If you bought around here, you were absolutely laughing all the way to the bank. That's how you want to think of any sell-off. Just keep in mind the structure, keep in mind the intercorrelation and interconnection between charts. These are the single best times to be an investor. Unfortunately, a lot of people who invest would never consider investing in something like this. But the professionals always know this is the ideal time to get in, and it's really emotionally difficult to do so. And that's why the payoff is so incredibly significant. Just keep this in your mind at all times. This particular area is what you want to focus on. If you can buy in and under these kinds of conditions, you will be unequivocally a financial blessing to yourself and those you love. Do not run from the markets. Stay in the markets and face the fire. Every single investor says buy low and sell high, but just remember, the vast majority of investors would never be in the market when it's reaching those lows. And if you are one of them who would be in the market, who is a trader and an investor, because you're combining both superpowers, I want to say how incredibly proud and impressed I am with your skills. This capability to get in when it goes really, really red is a superpower. It is unequivocally a superpower. And you don't always have to catch the bottom. But if you're inside the market, even if the market is recovering, that's perfectly fine. Just remember, this is like hell on earth to go through. But when you acclimatize yourself to the understanding, these are the best opportunities that you will ever find, then everything changes. Please let me know in the comments what you think about sell-offs like this and how you would approach it if it was to happen. I would like to thank Shah and Al for their very kind offer of a partial masterclass scholarship. Your name could be here. The link to this form is in the description of this video to be considered for this partial masterclass scholarship. If you're inside the masterclass or a current member of the service, if you've done level 1 and level 2 standard certification, you can get the course Profiting from CTKS Method structure absolutely free. All you need to do is to log in to this address, and that address is inside the description of this video as well. But please note that you have only until the 9th of October 2024, and please include your TradingView username because I'll be providing indicators that I use for my own trading. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.